Okay, good morning once again. It's my pleasure to welcome you to Module 5 of the Money Code. And like a joke, this is the fifth edition. It started out in January, and initially I wanted it to be a one-off event, but I realized that you can't learn about money even if you did the event for 24 hours. So it was better to learn as you go. Yes, learn as you go. You learn, you apply, you learn, you apply. So we've had four previous editions. This is the fifth one. And very, very interestingly, after the fourth edition, I said to myself, we must have a lady speak to us. And the way it happens, you just start something small and it goes big. So our guest speaker today is one of those big people in the area of investments. So MD of AROM Investment Manager. So she's going to join us and she's going to speak to us. But before we get into today's conversation, like we usually do, we do our book review. And I'd like to ask how many people did their book review for the month? If you did your book review, please let me know in the comment section. If you didn't, maybe we will have to find you. Trust me, it'll be good for you to do your book. Please let me know in the comment section. Then two, let me know where you are joining us from. So in our comment section on just let me know. Damaris, where are you joining us from? Churchill, you're welcome. Where are you joining? Just Uchena, where are you joining us from? Just let me know on our chat room. I want to have an idea of where we are. Since it's online, people have joined us from the UK, from Australia, from Dubai. Give me an idea where you are joining us from. And like I was saying, did you do your book review for the month? It's important. Now, what has happened is because of our book review, okay, Damaris is joining us from Dubai. I think I remember that. Yeah, so Juliet is joining us from River State. So yes, let me have an idea where people are joining us from. Now, like I said, interesting. There's a second person joining us from Dubai, Churchill. That's interesting. Okay, the book review, we usually read a book of the month. Thank you for your question, Juliet. Every month we read a book. I know some people can go a whole year without reading a book. But because this is like a school, we are learning about money, making money long term. We know that to make money long term, it has to be based on information, what you know, So, yeah, Uchenna is joining from Abuja. So every month we read a book. Now, if you are not part of our WhatsApp community, Chidi is going to help me post the link to the WhatsApp group in our chat room. You can join the WhatsApp community. We usually share a book. We read it. For example, in May, we read Rich Dad, Poor Dad. So when we come to the May edition of the program, we do a book review. What did you learn from the book? What are the key takeaways from the book? What can you apply from the book? Do you have any question about the book? Maybe something you don't agree with in the book. So all of those form our book review. So last book we read was Rich Dad Poor Dad. So I'm going to spend the next few minutes doing a book review of Rich Dad Poor Dad. Of course, that's a very popular book. I had read it many years ago, but because it was book of the month for me, I had to read it again. Now, that book was written by Robert Kiyosaki. Of course, a best-selling author. Now, for those of us, this is the book, Rich Dad, Poor Dad. He's a best-selling author. I'm going to tell you why that is very important clarification, because he did make it clear in the book. Not a best-writing author, but a best-selling author. Now, the book was self-published. And of course, somebody will wonder, why was it self-published? Because he couldn't get any publisher to publish the book for him. Nobody agrees to the philosophy. They looked at the book and said, no, you can't publish this book. But he self-published it, and to date, it has sold over 40 million copies. As an author myself, when I hear 40 million copies, I did a simple math. If he made $1 per book, that means he had made $40 million. If he made $2 per book, that means he has made $80 million. Like, wow, so to be a best-selling author, fantastic. So you can make a whole lot of money from selling your book if you write a good book. But that's to encourage somebody who wants to write. Now, the book challenged everything we know about money. Because that's one of the reasons why nobody wanted to publish the book, because the book seems to fly in the face of what people normally know and teach about money. So the book was contrary to what people know and teach about money. So it's like nobody wanted to publish this new book talking something different about money. But at the end of it, I realized that one of the reasons why people didn't like the book was its simplicity. It was just too simple. So they wanted to make it complicated. And making money, managing money, multiplying money, if it is complicated, only a few people can do it. Maybe the chartered accountants, the investment managers. But if it is simple, it means that I can do it, and then you can do it as well. Okay, Theophilus, thank you very much for joining. I can see you. Theophilus is joining us from Abuja, except you are out of town. So now, Rich Dad Poor Dad is based on his personal experience. So if you are reading the book, you find that there are just a bunch of stories. So he started off with his growing up. He had somebody he called his rich dad and somebody he called his poor dad. His poor dad was actually his father, who was a university professor, and he prioritized job security, traditional schooling, and working for a steady paycheck. That was the way he was. And this was his advice. Study hard and find a good job. This is kind of advice some people still give to you today. Study hard, find a good job. So it means that they obviously are preparing you to be an employee. Now you understand why I have to mention that later. So his poor dad was all about education, even was a PhD holder, whereas his rich dad was all about financial education. And both of them are education, but whereas one is academic, that prepares you to go work for somebody, work for money, the other one is financial, that prepares you in such a way that money works for you. Two different things. Both of them are education. Now, for the money code, we are more focused on this second half of education so that you are in a place where money works for you, not you working for money. Get a good job, work all your life and retire. No, let the government take care of you. No, this is talking about you educating yourself so that you know how money works, and then you are at a point where money works for you, not you working for money. Okay, thank you very much. I guess Mika is in the house, so we're going to continue, wrap up the book review, and then we're going to move on straight to our guest. Thank you, Mrs. Kai, for joining us. You are very welcome. Now, those I just talked about his two dads. Now, what does just getting literal education, that's the traditional education, what does it get you? It puts people in a cycle called a rat race. If you see the picture on the left, that's called a hamster's wheel. It's like you keep running and running and running, you are not going anywhere. And this is the experience of many people who simply work for a paycheck. You pick it up at the end of the month, and for the way ASU says it, they say my take-home pay cannot take me home. It means that you are in this continuous rat race. And what causes that? Number one is fear. Some people are so afraid of poverty that they stay at a job they didn't like. I remember when I was going to resign, the last place I had taken up a job, the people around me, what they were afraid was you will get broke. But hey, I've left there since, and fear did not stop me. But I realized there was a combat between fear and faith. Then number two, most people, their work is trading time for money. Of course, you hope for a raise. I remember my first job, we went, protested, and got a raise. I looked at the raise we got, and I said to myself, if we were going to protest again to get another raise, how many months are we going to wait? I knew it wasn't going to work. So most people trade time for money. And what makes this bad is that there's no leverage. Your time is limited, and how much you can earn is limited. So you are just trading your time for money. That is not the right way to earn. Of course, now this is a challenge we covered in one of our classes. When your income increases for most people, they simply spend more. They don't understand that when their income increases, there's something called investment, there's something called savings, which is some of the things we are learning in this group. They simply spend more. Their greed makes them spend more, and then the cycle continues. That's why it's called a rat race. You keep pursuing, you earn more, you spend more, you work more, and then the fear of poverty keeps you in a place where you don't want to be as you were forever. Now, What we say in the money code is that financial literacy is the foundation for wealth. Now, Robert Kiyosaki in his book urges financial intelligence as a solution to money problem. Financial intelligence, not your academic intelligence. Without financial education, even high earners struggle. I've seen people who have earned so much money or who earn so much money, they struggle without financial intelligence, because everything you earn, if you don't manage it and multiply it, you can spend it all. Now, 4 key things he said anybody needs to learn for financial literacy. Number 1 is accounting. And he makes it very simple. He simply breaks into assets and liability. I understand that accounting is a very large subject, but he brings it up. What is the simple accounting you can learn that helps you manage your money? Number 2, investing your money. This is what many people don't do. Most people earn to spend. I told us the definition of money. Most of us grew up learning from secondary school. Money is a medium of exchange. So when we get money, we go exchange it for something. Exchange it for a shirt, for a car, for a house. We just exchange it. We don't understand money as a store of value. 2 different definitions. People who understand money as a store of value, they save and they invest. But people who say medium of exchange, they earn and they spend. And that's the cycle rat race. Then number 3, he said you should know marketing. Everybody is a marketer. Everybody is selling something. A product, yourself, and idea. So you should learn marketing. And then finally, law. Not because he wants you to be a lawyer, but he wants you to take advantage of the tax system. That's where he talks about setting up corporations that protects your money. Because for people who earn, the government taxes them before they spend. But for corporations earn, spend, and what is left over is what the government finds to tax. So legally, they are protecting their wealth. Now, this is the crux of the book, as far as I'm concerned. Difference between assets and liabilities. Now, very simple definition. Assets put money in your pocket. This, you don't have to be a chartered accountant to know this simple definition. Assets put money in your pocket. Liabilities remove money from your pocket. And it's easy. Look at the things you engage in. Which one puts money in your pocket? Which one removes money? So if you have, for example, DSTV, does it put money in your pocket? Just ask yourself. Now, that's a very simple example. Does it put money in your pocket? Then it's a liability because it takes money away. Now, what are some assets examples? Rental properties, dividends. Now, we're going to, one of our next session, we're going to actually talk about investing in the Nigerian stock exchange, which is one of the things we are going to cover today, investing. So dividends, businesses, then intellectual property. You write a book, you do music, it keeps paying you again and again. Now, what are examples of liabilities? Anything that takes money out of your pocket, car loan, credit card debt, any debt, for example, consumer electronics, all of those things, expensive mortgages. Now, for Nigeria, for example, we don't have a lot of mortgages, but little by little, it's creeping into our system. Of course, as good as it is, it takes money out of your pocket, so it's a liability, except it's a mortgage where you earn rental income from with a positive cash flow. That's that. Now, he said this, please note, the rich focus on building their asset column. They want more and more assets. Dangote just finished his oil refinery. I think he just settled and he's doing well. Immediately, he's thinking of power. He's thinking of another refinery, multiple refineries in many African countries. And then he's thinking of power in Nigeria, because power is a major problem. So what is he doing? He's thinking of building his asset column, not liabilities. Whereas the middle class focus on liabilities. They buy liabilities instead of investing in assets. Now, having learned this, how do you free yourself from the rat race? Is to make money work for you. Make money work for you. The traditional path says, take a job, earn a salary, spend, which is expenses, then repeat. That's the traditional path. Whereas the path to financial freedom says, earn money from your assets. Now you can get assets from your salary or from your business. From your assets, you earn passive income. And then when you grow your passive income enough, you get what is called financial freedom. Now, financial freedom may mean different things to different people, but it does not simply mean to resign. Yes, let me use to resign, to be idle, to do nothing. No, financial freedom means you work because you want to work. You work because you enjoy what you are doing. Now, this part of the book is quite important. It helps you to find where you are. Not just that you find where you are, it also encourages you to move. Now, he breaks the way people live or earn generally into 4 different sections. Now, let me just go through the section. The employee, these are people who simply work for money. Business owner, these are people who work in their own business, what we call self-employed, but little by little, they start to leverage. Self-employed, then, okay, business owner leverage, work with people. Self-employed, work for themselves. Like, for example, your mechanic, your carpenter, they just work for themselves. Most of the time, they are their own only employee. But business owner starts to work with people, leverage. So he earns from other people's work. And then finally, investors. These are people who make money work for them. They don't have to move a pin. All they need to do is move their money, put it into stock, shares, businesses, any investment, venture capitalists, and then the money comes back. So the whole idea is for you to move from the left side to the right, whether you are an employee or you are self-employed, to move to become a business owner or an investor. That's the whole idea of this cash quadrant. It doesn't matter where you are right now. You are an employee, you are self-employed. It's for you to move yourself to the right side, which is own a business or invest in business in stock and shares. Now, the final thoughts, some key skills you should learn. Of course, say one key skill can move you many miles ahead. Sales and communication. Sales, your ability to sell, your ability to communicate. Somebody said there are 2 people in the world, those who build and those who sell. Now, what I've learned is if you build and you can't sell, you are in trouble. If you can sell, you can build, no problem. You can sell other people's products and you are still good to go. So selling, communication, 2 key skills. Then leadership. Because if you must run a business, you must learn to manage people. Now, any of these skills, one skill can change your life, whether it's communication, whether it's scale, whether it's AI, let me mention that, or whatever. One key skill can change your life for good. Now, finally, spoke about the power of corporations, how owning a business can help protect your assets. For many of us, we may be employees or self-employed, but at this level, you are protecting your income from taxes. Now, if this is your challenge, you actually gone quite far, where you leverage laws legally to reduce your tax liabilities as a person. Now, your path to financial freedom. Number 1, stop working for money. It doesn't mean don't go to work on Monday. Don't work just for money. Don't remain an employee forever. Move from being an employee to a business owner and an investor. There are people who move from being an employee to becoming an investor. Your salary is 2 million, 1 million. You can invest a part of it, which is one of the things we are going to learn today, until you become an investor and you work because you want to work. So stop just simply working for money. Number 2, build your asset column. 10,000 a week, 100,000 a month, 500,000 a year, whatever. Consistently build your asset column. Never spend everything you earn. Build your asset column. Educate yourself. I believe that's what we are doing at the Money Code. This is our 5th section. And then if you are educated and you learn to invest, you can break this, what is called the rat race of the financial cycle, the rat race. You can break it so that you work, you live in financial freedom, where you work because you want to work, not necessarily working for money. So if there's any other lesson that you picked up for those of us who had gone through this book and you think I missed out from my conversation, please drop it in the comment section so that others can learn 1 or 2 things. Now, for those of us just joining us, this is our book review. And the book of the month for me, like somebody asked, was Rich Dad Poor Dad. Every month we read a book, and to start every section at the end of the month, we do a book review. We read Rich Dad Poor Dad. This is the 5th book we are reading for the year, which is a good thing for some people who don't read a book a month. For some people who read more than one book a month, this is an additional read. And this is reading and learning about money. This is continuous financial education. And like I said at the introduction, for as many of us as are joined into this conversation, please let me know where you are joining us from. There are people joining us from Abuja. There are people joining us from Dubai. Interestingly, 2 people are joining us from Dubai. Juliet is joining us from Rivers. Damaris is joining us from Dubai. Churchill is joining us from Dubai. So please just put in the comment section. Give me an idea of where you are joining us from. And I want to say thank you very much for joining us. And you are all welcome to Module 5 of the Money Code. And it's my pleasure being your host. And we've done this from January till now. We actually intend to continue. And one very interesting thing, exciting thing for the month is the quality of speaker we have for the month. We've been blessed with very amazing speakers since January, and the quality of speaker we have is somebody who is fitting for this kind of conversation. Talk about investment, talk about managing your money, talk about multiplying your money, talk about growing your money. And let me mention before I bring in our guest speaker, there are 3 key pillars to the money code. They are making money, managing money, and then finally multiplying money. Making, managing, multiplying money. That's the 3 key pillars. So every conversation we have here is either it's talking about making money, multiple streams of income, getting more skills, doing your business better, or managing money, savings, budgeting. Chidi taught us about budgeting. Managing your money, that's 2. And then 3, multiplying your money. It's not enough to pile up money, save money. No. How do you make money work for you? So today's conversation is going to be centered around multiplying your money. How do you make money work for you? Like Rich Dad taught us in our last book review. How do you make money work for you? So those are the 3 key pillars of the money code: making money, managing money, and multiplying money. And like I said, we've had the pleasure of having very wonderful speakers. So today, it's my pleasure to welcome our speaker for the day, who has been with us for a while. Thank you for joining us early. So I'm going to get out of the way as I make welcome Mrs. Kai Ogar, Managing Director, AROM Investment Managers. I believe after this conversation, we should all be going to AROM to open an investment account. I'm sure she's going to bring us enough information, enough weight of her experience in investment to help us grow our money. And then there's a word she said to me, to move from money flow to money grow. Money flow is in and out. We earn, we spend. But money grow, it comes in and it grows. I very much love money flow to money grow. So please help me make welcome. If this was a live event, I'll say put your hands together, a standing ovation. But hey, all the thumbs up, all the likes is we are online. So all the online hugs and hearts as I make welcome Mrs. Kai Ogar to take over from here. So I'm going to sign out as he will. So let's welcome Mrs. Kai Ogar. Please, ma'am, we are all ears, so you can unmute and you take over the class from here. Thank you very much. We really appreciate your joining us. So please, I'm handing over from here. Thank you very much, ma'am. Did she log out? Sorry, 1 minute. She's not in the room right now. Just give me 1 minute. She's not in the room right now. She is not in the room. She was with us earlier. Okay, let's just hold on for a brief minute. Let me allow her log back in. I think maybe network matter. But while we are waiting for her to come back in, let me share something quickly with us. Let me stop this share and then share something else with us quickly. Just give me 1 minute. Before she logs back in, let me Let me share something else with us. Okay, for those of us who are just joining, this is the money code, and let me share our key philosophies with us as you hear. There are key philosophies that underguide the money code. Let me see if she's back. Once she's back in the room, trust me, I'm going to hand over. Okay, madam, thank you. Welcome back. It's like you logged off briefly. So we are ready for you. We are ready. So if you can unmute yourself, Mrs. Kai, if you can hear me, please unmute and let me hand over. Okay, please unmute yourself. Let me hand over the microphone to you. Hello. Just 1 minute, please. She's on the call, so let me check up with her. Check up with her. 1 minute. She's on the call, so I'm not going to continue. I just wanted to share some thoughts on what the money code is about, which I have touched briefly, but I just wanted to do that while I wait for her to come in. Give me 1 minute. I'm calling her on the phone so that, okay, so while I'm doing that, let me put this on the screen and just try and walk us through. Now, the money code is a philosophy, and the philosophy is based on the fact that there is a rule, or there are rules to the money game. If you think money is by luck, by chance, no problem. There are people who make money by chance, by luck. They win the lottery or they get an inheritance, but wealth is not by chance or by luck. There are rules to money. And for us here, like I just have mentioned in very many ways, we focus on making money, managing money, and then multiplying money. So what does each of these three things, what do they mean? Making money is about creating value and generating income. Creating value and generating income. That's what making money is all about. Creating value and then generating income. That's what making money is all about. And it's foundational, it's fundamental. If you don't start from making money, you cannot get on to investing. Of course, we're going to talk about investing, right? We'll talk about saving. How do you save money you have not made? So it starts with making money. And making money can be from a job. I know, yes, I'm one of those people that advocate run your own business or be an investor, but you can start from the level of taking a job for what you learn, for what you earn. So that's making money. And because it involves developing skills. People pay for skills, build competence, solve problems. You want to make money, find a problem, solve it. Now, Nigeria has many problems. Sometimes I think, how do we solve this problem? Solve a problem, make money. That's that. Then identifying opportunities. Somebody said that he profits from the problem in Nigeria. You know, there's this joke by lawyers that if there's no problem, they will not eat. So when there's a problem, lawyers make money. So that's identify opportunities, whether it's a problem, make money from it, then find what people are willing to pay for. Now, for people who want to start a business, sometimes they make a product they are passionate about, not caring whether people are willing to pay for it. So you like it. It doesn't mean that people will be willing to pay for it. But if you find something people will be willing to pay for, even if you don't like it, produce it, and then you would make money. I'm trying to reach her, but she's not picking up her call. Then, okay,
the more value. I can hear you now.
Okay, thank you very much. I've been trying to reach you. So I am going to sign out now. All right, everybody, please let's make welcome Mrs. Kai Ogar. She's going to take over from here. She's the managing director of AROM Investment Manager. So please listen. She's not off the street. She's not off the shelf too. Yeah, these are the movers and shakers of the investment sector. So it's a pleasure and an honor for us to be hosting her today. So, Madam, thank you very much for doing us this honor. I'm going to step out of the way. I have said plenty, but now I'm going to take my pen and paper, which I hope you have, listen and learn. So please, let's make welcome Mrs. Kai Ogar. Madam, I'm muting myself right away. So please take over.
Okay, thank you. But I think you need to enable me to share.
Okay, let me do that. Okay.
I need to be able to share my
screen. Settings. One minute. Sorry, I'm doing that. Sorry. Okay. Okay, I just enabled that. Try sharing. I just enabled all participants.
The share button is not coming up. Let me check.
Okay, I just enabled all participants. Oh, Barnabas is joining us from Yola. Okay, can you try again? I've enabled all participants to share. Okay, let me stop sharing. I think that's the challenge. Okay. Okay, I just stopped sharing. I was still sharing. So please try again. I just stopped sharing. I think that was the challenge. I have stopped sharing. I'm sure you can share now. Is the share button on, man?
Trying to get it to come up. Okay. Yeah, hopefully now. Can you see my screen?
Let me see.
I'm sharing.
Yes, yes.
Okay, you
yes,
see, so let me put it in
yes, we can see your screen.
Okay, I'm trying to put it in presentation mode.
Okay.
So can you see now?
Yes.
I just need to put on my video as well.
Yes, I see.
Okay. You see me? You see my screen?
Yes. We see your glasses too.
Ah, that's nice. Okay, so but it's not the screen isn't moving though. Okay.
It's moving.
Okay,
it's moving.
Good. So you see me, you see my screen. It's going to be a beautiful
Okay, so
I'm
signing out.
Okay. Thank you so much. Please, at any point in time, if you can't hear me, I don't know, I'll be looking at my phone, sir, just so that I know that if there's an issue in between, right? Because I think there's something going on with the screen. I had a webinar yesterday and there was some issue as well, but I'm putting it in front of me. If I see your chat, I'll also look at it. So thank you very much. My name is Kai Ogar. I manage the business at ARM Investment Managers, and it's a pleasure to be with you at the Money Code. I believe this is your community where you guys do a lot of things and empowering people and helping people to understand, what it is to navigate, the different things. But I know this is more about money. And so I heard the last bit, where you were talking to them. I heard a bit about investments. There are a few things I heard, and I'll connect it to that slide. Let me not go ahead of myself. And I was like, how interesting, because this is part of what I had in my slides. Goodness, my slides were prepared before even today. So people get to know. Thank you very much. It's a pleasure. Let me ask you to please go to the chat and write one thing about money for you. What is one thing that you wish could happen about money, right? And I'm looking at the chat because it's going to be very interactive, even though I know we have 1 minute. Uchenna, you said welcome. Thank you so much. I'm grateful for this. And I'll introduce myself. I'll tell you stories. You're going to find out a lot of things. So nobody is chatting. I'm going to be the first person. And for me, money is freedom. I always just see freedom whenever I think about money. Money gives you a voice, Juliet. Absolutely. Money gives you that voice that, I don't even want to be able to explain it. Like they call you even for village meeting. The fact that you can contribute those monies and you're not complaining, your voice will be the loudest, right? Money gives you respect. Okay. Not about just what money gives you. What is it for you about money? Are you looking to build income? It may not just be for freedom. Okay, for example, another thing for me about money is that I will be able to achieve my goals. I will be able to travel. Choices. Yes, Kenneth, I see you. So I see Kenneth. Kenneth said choices. Precious said respect, right? When you go to those village meetings, you'll be empowered. Okay, let's keep flowing in the charts, right? We're kind of slow, and I want to move very quickly because there's quite a lot to cover. So wealth beyond income building, wealth beyond income, right? Wealth beyond income. So how do you actually build financial security through investing? That's what we're going to be doing today. And then I had a subtopic which I told the coordinator that I had a subtopic that in all of this, I was thinking, okay, so how do people really move from just money flow to grow? How do you grow your income? Same thing. That's what we're going to be doing. So a brief about our company. I've been in this company for 13 years, and our company is a group office. So we have ARM Investments on your left, we have ARM Capital, we have securities, we have trustees. On the right, we have alternative investment businesses in the group, just a high level. I don't even want to bother you too much about it. But I put this slide here to say that in Nigeria today, there are things like crude oil, currency, inflation, interest rates, the GDP. All of these things affect how we see what is going on in the economy. So I'm going to go a little later into fixed income. I'll talk to you a little bit, maybe touch on equities and the different investments that are available. So just for you to know, I don't want to make it too technical, that the outlook is really saying that there's opportunities for you to invest. You can do equities, you can do a fixed income, and I'll explain them later. So this is just to say that things like crude oil, whatever is going on with them, even the war in the war that we're having in Iran, Gaza, all of those issues affect where we are today. Then the currency, the inflation on currency, the rate of the naira, the rate of the dollar. Then we're also seeing inflation, higher increases, fuel prices, which would also raise food inflation and energy costs. All of these things affect us one way or the other. And it's important that we know, so we understand them and we know how to manage them, okay? And all of these conversations. So I'll just say here that something I'd like us to think about here is that the economic realities in Nigeria, what we're seeing is that there's persistent inflation, which reduces purchasing power. I was trying to say that FX volatility affects business operations and import costs. And we're also seeing rising job insecurity across the formal and informal sector. You need to understand where you are. If you don't understand where you are, it makes it very difficult for you to even start to talk about investment. Then another thing you need to do is diversify your income streams. I'm going to take it a little bit at a time. We usually do macro and then do micro. So we give you the big picture, then we bring it down to you. How do you protect your assets through investment? And then how do you also build emergency funds? The coordinator had taken me through some of what you guys had discussed in your first module, second module, third module, fourth module. And I know that there are concerns around people borrowing, people having a lot of expenses. There's a lot of instability, and I'm going to try and deal with that. So today, I'm basically going to try to fix the leaks and map the flow. My goal is to help you to be able to have a picture and understand where your debt is, your cash flow issues, and then maybe just put a basic plan. If that's all we achieve today, sir, I'm very, very happy that the maybe 11 or 12 people on the call have been helped. I see another information on the chat. Money makes you strong. Excellent, Theo. I totally agree with you. Once you have money, you're okay. Precious also say financial growth and stability. Absolutely. Excellent. Theo says money makes you strong. I really like that one. I really like it. Money makes you strong. I believe that because it helps you to be able to. So when you're sick and there's money, you go to the hospital, you get better. When you have a group of friends that are visiting you, you can take them out. It just puts you in an empowered position. I absolutely agree with that. So I'm going to go back to my slide. Strategies for wealth creation. The first thing I want you to do is write this in your notes. Where am I? Identify where are you in your journey? Where are you? And then what does that imply? What does it actually imply? So a bit of reflection, because you've had 5 months already, or maybe 4 months. This is the month of May. Ending tomorrow, yeah, Sunday, tomorrow is ending. What worked? You have to be honest with yourself. What has worked? If what has worked is that you've been putting 5,000 in a savings account since January, that's fine. It has worked. If what has worked is that you wrote a business plan and you followed it up, that's fine. If what has worked is that you wrote what were your leverages, you'll be able to understand these are my leverages, these are the things that I take advantage of. Absolutely. Then you need to be honest about what did not work or what is not working. Okay? What is not working? It could be simple things like you're not having enough sleep, you're not organizing yourself, you're watching too much TV, and I'm going to get to some of those. So please mind what has not worked and what has worked. I'm going to come back to them. So write it. And if you want, you can please go to the chat. Like I said, this session is very, very interactive. Please go to the chat and type what has not worked. And I said a few things, okay? What has not worked, what has worked. Then we can have a conversation around it. So one of the first things, I like to take my conversation from the soft to the hard. The technical is that you are going to invest. I'm going to show you how to invest and the options. But if I would not do you an advantage if I just jumped into investing. I'm also a certified neuro-linguistics coach, which means that NLP, we look at problems and try to bring solutions from the base, from the internal, from the neuro. What has happened in your mind, your childhood, your growing up that has influenced where you are today. So I'm going to take it from here. Factors affecting earnings. One of the things is that I can tell you today, come and put 1 million naira in ARM and invest. Okay, I can do that right away. Oh, please come and invest in my company. When people call me, they say they want to invest. What are please, can you tell us you want to invest? I said, okay, how much do you have? They think that is a question. It's not to put anybody off. If you don't have 5,000 naira to invest, and I'm telling you, all the investment vehicles have not done justice. So the first thing is, what is your disposable income? To even understand it, is it that you have 100,000 as salary today, and in that 100,000 naira, maybe what is left for you is 10,000. Then your disposable income is 10,000. But then the question is, can you also increase that 10,000 so that you have a wider base? So the factors that are affecting your earnings, you need to even understand what is it that is making me not to earn so much. For those of us that are in employment, your type of career choice, your place of employment, I'm a civil servant. They're paying me 100K, they're paying me 200,000. That's where you find yourself today. Ability to find employment, education, employability skills, right? If you've performed on the job and they're promoting you, then what are the workplace trends? Like in developing countries like Nigeria and other African countries, the opportunities, are they as available to you as maybe if you were in another place? So those are the kind of things you need to look at. Then your ability to also find employment, your ability to get employment, your ability to stay in employment, to continue to grow. Those are some of the factors that also affect earnings. Okay. Then another thing is how you have earned your. 1 second, please. The other thing is how you have earned and how you have progressed in your career. I think I mentioned that. Then, of course, your standard of living and your earnings. So by the time you put all of this together, you find out that they form a very, very big, they impact you in many ways. And many people don't know that it's a very, very strong impact on how you navigate. Okay, I'm trying to also just do something because give me a second. Give me a second, please. Okay, so now I want you to look at this thing I have on the slide. You just look at my slide. Okay. In life, I'm building foundations. I'm really building the foundations now. Look at your relationships, your recreation, your service, money, health, learning, organization. All of these factors play a major role in how you grow in your life. So they all form part of the whole structure. You're not, and some people now, they're only focusing on relationships. Some people are focusing only on maybe working in the organization. All these factors add up to make you or break you. So you need to understand. For example, I've seen a case where people will start money, yet they're not taking care of their health. A major anomaly, major. Yesterday I went to do a test in the hospital and I saw people, some elderly people living, struggling with the sticks, they couldn't walk, they're limping. If you start to take care of your health today, then you have chances of enjoying your money tomorrow. So the question is, are you balancing? This is what this is saying. Even in the desire to make money, in the desire to grow, in the desire to be able to make your impact and to build your organization, remember that you need to have a balance. Then another very important question I usually would ask people is, how old are you? So try to answer the 10-year question. And I'm building a lot of grounds, right? I'm building. At some point, I'll probably even stop and see whether we could just take questions and see how we navigate. But the first thing is here, the 10-year question. If you're 42 years old, I don't know what the average age is in your community, sir, but if you're 42 years old today, in 10 years, you'll be 52. What plans do you have for yourself as maybe an individual or family or couple, whatever? So how old are you? The question is, how old are you today? If you add 10 years to 2026, in 10 years, it will be 2036. And if you have a 10-year-old child, your child will be 20. It has a lot of implication. What schools are they going to? What are they going to be doing in school? What are they, how would you fund their education? These are the questions to ask yourself. So just like I mentioned on this live slide, you need to have clarity. I didn't put that slide here, but clarity is clarity. I think the first thing is, after all of these things, sit down and have clarity and say, you know what? This is my outlook for life. This is where this question comes in. This question is saying to you, have clarity. Clarity about your life, clarity about your goals, clarity about your business, clarity about your family. I see a lot of people wasting so much time playing along, men doing what they want to do. Even women these days, people are just playing on social media. You have to have clarity about your journey and where you are going. What is the 10-year plan? What is the 10-year objective? Even if you don't want to do 20, 30 years, can you even just have a 1-year plan, a 5-year plan? There may be a 10-year plan. So clarity is clarity. What do I see myself at the end of 2026? Give or take, whatever, yes, sickness comes, people die, but here, where do I see myself in the next 10 years? So clarity, right? When you've identified your clarity, then you now begin to say, okay. And some of the things that are stopping us, like I mentioned, will be procrastination, being disorganized, wrong decision-making, indecision, low self-esteem, indiscipline, lack of planning. I always tell people, everything you're contending with is your purpose. So it's about your purpose. Some people I also teach marriage classes in church. People will say, oh, it's my husband, it's my wife. It is your purpose here. Focus on it. It's what you want to achieve. Who do you want to become? Tell yourself, I decided I'm going to make 100 million in my business this year. If that is your target, the next thing is to ask yourself how. But you must deal with these things. I teach a class where I teach people about the iceberg. The iceberg concept is basically from the movie Titanic. I don't know how many of you, I'm sure many of us have watched that movie, the love movie, where the Titanic crashed, So this image is a symbol from that, the thinking from the Titanic around that. So we use it in training and coaching and teaching, where you're saying, what is below the iceberg? What is below the water? The iceberg principle is that there are certain things that we ignore. And I cannot tell you to come and start saving, because some people have started saving. There are people that have been in my company for 13 years, and there are people I have been speaking to about saving and investing for the last 13 years. They have not taken that decision up to now. Indecision. For 13 years. If I went, some of them see me in church, they run away, they run the other way. When they see me in town, they'll say, ah, see this lady. But meanwhile, you have not changed your position. Meanwhile, there are other people that started investing for 13 years. Every month, they're putting 100K. Every month, 300,000. When we get to compounding, I'll show you something. I'll refer back to it. So basically, as much as possible, deal with your iceberg issues. Please go to the chat so that it's a bit interactive again. Can we have some interaction? Please type your own procrastination. Precious, thank you for being engaging with me this morning. I'm currently at work now. My attention is divided. Okay, that's fine. That's fine. So, excuse me, one of the things that I find personally, my own personal things under the iceberg is sleep. I won't lie to you, but I'm very, very honest about it. I need to sleep more. I need to have a deep sleep pattern because that also affects us. Okay, can I have reactions? In the chat, please. Can any people are not responding? I need to know that I'm not just speaking to myself. It takes a lot of effort to do this. Audacity, okay. Excuse me, I don't know what is going on. Okay, audacity to use leverage and speed of execution. Okay, so Mr. Kenneth, you're saying that one of the things limiting in the iceberg for you is the fact that maybe lack of speed, right? And not being able to use leverage. I have a slide on leverage. Interestingly, this is all captured. Awesome. Any other thoughts from the class? Let's be sure that people are following. I'm not going to be teaching to only Mr. Kenneth this morning. Any other thoughts? What are your thoughts? What is slowing you back? Procrastination, being disorganized. I see Victor left. Excellent, you left. Okay, what's going on? Laziness. Okay, iPhone, no name, but yeah, laziness. Yes, you have to do with laziness. iPhone person, you must do with laziness. You have to do with laziness. Okay, absolutely. Okay. Any other reactions? For me, I think what is hindering me is not having financial resources. Okay, Precious, can I shock you that? Can you tell me what kind of financial resources you're referring to? Juliet, consistency, yes, because you must be consistent with anything you're doing. That is a powerhouse. Procrastination, procrastination, yes, it's a big enemy. You have to have a plan. So for procrastination, I would say try to use your phone calendar in your phone and program the things you want to do. So don't wait for Monday morning to tell yourself I'm doing this. Like my gym, I just got back, literally ran home from a meeting, and then I'd also done my gym this morning. I programmed it. I put it in my phone, gym on Monday by 5 after work, so that there's no story. It will pop up on my phone. Precious, can you tell me what the financial resources are? Because we do with all of this. If I don't do with them, I have actually not helped you. So I need to help you. Precious, one more thought from you, if you can. What is the financial resources? Okay. That financial resource, money and the right person to put me through. Well, you have mentors here. That is why you're in this place with Mr. Kenneth Ogbegbo. You're already in this group and you're in this community. I can tell you that money is not what you need. What you need is a clear idea and a plan. In today's world, you don't need to own any product. I heard in the webinar earlier, he was talking about selling, communication and selling. In today's world, all you need to do is to be online. You put up a picture of a product, you collect the money from the person paying, and you take it to the person that has the product, and you pay them and you take it back. Do you understand? So you're the middleman. You have the people that own wrapper. The other person, I want wrapper. Mrs. Jane has wrapper somewhere. You take the picture, you show me, I pay you, you go back and pay her and bring it to me. So you don't need money. I need to remove that mindset from people. You really do not need money. Everything I've done in this life, and it's almost 28 years of doing business, planning, Rather, it's not money. It is coordination, organizing yourself. But we can talk about that later so that you are helped, okay? Thank you guys for engaging. So do your iceberg. Identify the things that you know are holding you back. If it is lack of education, thank God you are in a structure with in the money code structure and you are learning. Organizing is another big thing. You have to organize yourself. Okay. Let's go. So I'm going to be teaching you now a bit deeper. Those were soft things. Now, financial planning. What is this financial planning? How do you move from point A to point B? Monday is June. So can you say that between 1st of June to 31st of December, I want to make 1 million naira. I want to make 5 million naira. And then what we now say is your goal and your time. So you have two factors, goal, time, and this affects your desired situation. So the question is, how do I get there? I'm going to be teaching you today how you get to this body. Go to the chat, interactive, tell one thing that you are doing as your goal. What is one goal you have? What is one goal? My goal for I can't see the typing place again. Where is it again? So one of my goals this year is to launch my 3 books, my 3 personal books. It's a big goal for me. I'm going to do an unveiling in Lagos. Okay, it's big because we have books in we have a non-profit as well, and then we have a training center. So I also write, I coach, I teach, I mentor. It's just a lot. I can't put everything out here. But one of my goals is to launch unveil my books in Lagos. It's a big one for me, and to raise a significant size of money that I'll use to support the non-profits. Now, what is your goal? Your goal could be make 1 million. If you are in a place where you have never saved 1 million, please make 1 million should be your goal by December 31st. Can I have somebody follow that? Anybody else? What are your goals? I've typed 2 for you. Anybody? I want to travel to Lagos for the first time. I want to go to Ibom during Christmas. I want to be able to pay for a certain certificate for my children. Please, can we have your goals? Because I feel as if I'm just teaching myself this class, okay? Your goal is your goal. And you know what? There's a funny, an online author that I follow. I believe he's late now. And he said his mentor, when he was coming up, told him, where are your goals? Like I'm asking people, where are your goals? Mr. Kenneth and I are the only ones. Launch a structured real estate firm based on leverage. Absolutely. His goal is clear, not based on somebody selling it on the left or selling or based on leverage. But sir, Mr. Kenneth, can you define what that leverage is? That will make your goal clearer. Okay? Launch a structured real estate firm based on leveraging this. It has to be clearer for you to begin to attract it. Okay, so you guys are not even telling me your goals. Then why are we having this session? Why are we having a session where people cannot type their goals? Okay, Deborah, CIPM certified before 31st December. Awesome. Now, CIPM is going to cost you money. It's going to cost you studying. It's going to cost you doing some documentation, reading, maybe even going to Lagos for some things. I don't know. Now, you need to list all of them. Okay, so what are your goals? Only one person in this chat. Not encouraging, I'll tell you. Not encouraging. Anyway, the concept of financial life planning, you have to think about where you are, your age. How old are you? How old are you? How old are you today? I've asked you. Identify yourself in the spectrum. Now, there are 4 quadrants: wealth accumulation, wealth enhancement, conservation, protection, and the gifting. Where are you? I believe most people will probably be between 35, 45, there about maybe 35 to 60. So now different things happen in this quadrant and you need to understand where you are. So the very first one is asset accumulation phase, right? Where people are mostly younger. If you're under 35, you should actually be saving more money and you have more money because you have not even started having children on the right, which is the wealth enhancement phase. Usually between ages 35 to 55, you are married, You're buying baby food, Pampers, maybe you're doing school fees and all of those things. So there's a lot of increased borrowing. Then you go to the conservation phase where you have this occurs between 55 to 65 and mostly getting older. So if you're working in a civil service place, you are actually more cautious. You don't have as much income. Maybe you took a mortgage and all of that. Then the gifting phase, which is where you are looking to leave a legacy for your grandchildren or something like that. Okay, so I've discussed that. Now the thing is, you need to determine what stage you are. The first thing to do is in building wealth, we're going to gradually move into investment. Evaluate your current situation, your income, your expenses, your investments and savings, and your debt. This debt, now they finish person. Okay, it's a bit hot where I am, so excuse me to do this. I think it should be fine. Okay, so your income, your expenses, your investments and savings, and your debts. Have you got that? So evaluate your situation. What is my current income? What is my expenses? Now take a sheet of paper, divide it into two. On the left is your income, on the right is your expenses. You find out that, I think I have that slide, that's it. You find out that your spending pattern for many people, they don't even break even. They'll say, oh, it's Tinubu era, housing, food, dependence, entertainment, loans, vacations, data, but you have to sit down, and I'm going to show you the next one. So the right thing to do is to budget. You must budget. I think I heard that in the morning. You have to put a budget. You have to put a budget to your money, any money that comes in. And when you do your budget and find out that your income is less than your expenses, because your income should be more, or your expenses should be less. You have to make more money and spend less, right? Manage what you're spending. If you find out that your expenses are too high, what you then need to do is that you must cut down. You must cut down expenses the way to make money. Does that make sense? Can I have reactions to this in the chat, please? Data, and my goal is to build my current fashion brand to the level that my clothes brand will be exported. Absolutely. But you need to have timelines. You have to have structure on that, Uchenna. Okay. So awesome. Thank you for being interactive. Thank you for communicating. Please ensure that you evaluate your spending pattern. Very important. If you're not evaluating your expenses and your income, this is the first place, because you need to know, do I make 1 million? Is my income repeatable? So if you work in a salary place, your income will be repeated. Okay, what if you're a business person? How do you make sure that your money repeats itself? That's what this is also saying. Okay, you need to break even. Another exercise, money class is very practical. I always tell people the money class is extremely practical. It's not one of those where you sit down. No, it's not storytelling. This is part of it. And he started to do this earlier on in the meeting, correct? I was part of that, and I heard where he was saying, what are your liabilities and your assets? Again, on a sheet of paper, your assets are what you own. So stop buying liabilities, manage the leakages. The problem, we're collecting loan everywhere. We're buying things we don't need. Women, we stack your wardrobe with this, that. Everybody is saying they're wearing this, you want to buy it. No, capital no, stop it. You don't need to, you will not build assets. You will not build a good life that way. So manage all those loans. If you collected money for mortgage, if you own a house, you borrowed money to buy a house, it's not yours because it's a liability until you pay. Your vehicle loan, any loan, all those online debts, stop it. You're buying liabilities. On the left side, buy assets. Your jewelry, gold, your retirement, investments. Now, if you're a government person and you work in government, what you find out is that your RSC, right, is part of your retirement or something. But many times I tell people, the percentages are fixed. For some institutions, you get 15%. I think the average is about 20% or thereabouts at retirement. So let me explain. If you retire and you have 100 million, which I don't know that many of the Nigerians today is not where they are. So let's assume it's even 100. And then you get 20% of that. That's 20 million at retirement. Is that enough? So that's why I encourage people, use your active years to build wealth, create wealth. Start by understanding this slide is very important. Your inflow and your outflow. What is my inflow? Is it 1 million? Even as a business person, your own personal inflow, how much is it? If your business makes 1 million, it's not that 1 million that is yours. That's business money. Maybe they pay you 200,000. Good. So your money is 200,000. Now do your expenses. By the time you do your expenses, if you are not breaking even, then you need to increase your capacity. Okay. Then the next thing is do your assets and your liability. Your assets, your bonds, your stocks, your mutual funds, which I'll talk about later. Real estate, buying a land in Guagualada. All those things are assets. Stop buying liabilities. And I call it a leaking bucket. I've seen too many people wasting time, wasting resources, buying liabilities every day. Okay, please go to the chat and type one liability that you stop buying. I want it to be really interactive. Okay, go back to the chat. Excuse me 1 second. I'm going to get up just for a minute to get some water. Okay, so I want you to go to the chat and please type very, very important. You're hearing my voice, right? While you're at it, so that we can continue the class and save some time. Expenses need to be what? I can't even see the chat again. Okay. Expenses, compare your inflow and outflow. Absolutely. Thank you, sir, for trying to help me remember that. Wig, yes. And it's nothing wrong, Juliet. There's nothing wrong with having or buying wig. The ladies that I bought, I have these 2 weeks. One I bought 6 or 7 years ago, and the other one I bought 2 or 3 years ago during one of my major birthdays. So the ladies, they say they don't like me at all because me, I buy wig once in 5 years. But you know what? I'm not going to buy liabilities and then empower you anyhow. The wig I have, there's nothing wrong with it. So I'm not saying don't do these things. Misplaced priorities. Exactly, Precious. Many things are misplaced. But you know why? Because you are not clear on your objective. So I said the first thing is clarity. If you get clarity about yourself, your objective, honestly, you're not going to. Can I have more reactions about the liabilities now? Liabilities. All the liabilities. I don't know why we're not naming them, but they're usually many. What are the liabilities that, even your sometimes wristwatches, clothes, and should it be every month? Exactly. And there's nothing wrong with supporting family. So I said to people, somebody said the other day that one lady did a should be for like 150, 200, and people were saying it's too much and all, But I just say, look, if you have worked for the money and you have it, no problem. The problem is when you are still struggling. You have not built assets, eating out. Exactly. Exactly. I saw the one on high heels. I don't want to say anything. They will say this woman. Because the one on high heels, if you're a high heel person, just get a good high heel shoe that can take you for some time. But ladies, let me even tell you, because I also study some things on health. Those high heels that you wear, the back of your ankle, the back of your calf, you're actually your leg is supposed to be flat on the floor. So those high heels, be careful with them, Sha. That's all I know is from a doctor that is a bone doctor that I heard that one from. Okay, so liabilities, manage that. Manage your liabilities. Absolutely, you have to. Okay, let me see what else we have on the chart. I'm trying to see. Going to high-end salon. One of my liabilities is buying one shoe because I love wearing good shoes. But recently, I just started whatever. So now I use part of my gains to pay. So you know what? What I tell people then, luxury things are good, but buying them when you know you have the means to afford it. Exactly. That is the point, Precious. Thank you for engaging with me. You can buy these things, no problem. But buy them when let your money work for you. Money working for you while you sleep. Then you can use that money to pay to buy it. Okay. So the next slide I have. The next slide I have is debt audit exercise. Because if you don't do this exercise, you won't know, am I off? Can you hear me? I want to confirm that I'm heard. And can you still see my slide?
Yes, we
Please
can hear you. We
confirm.
can see the slide, but
Okay.
it's not on presenter mode now.
Okay, back to presenter mode. Thank you.
Yes, it's
All
okay
that
now.
trying to go to the chat that keeps confusing me. Okay, so fine. Good. I'm good. Okay, so let's move. I think we're moving nicely. Okay, so do your debt audit exercise. There's good debt and there's bad debt. Because I got feedback about the concerns and I tried to build the slides based on what the issues were. Debt categories, good debt. Good debt can be used to acquire assets or increase income. For example, I took a loan some years ago from Federal Mortgage Bank to buy a house or whatever in Dubai. That is a debt. It's a very good debt, right? Financing your business, equipment finance, you borrow money, and then also business expansion loans. Those are good debts. Now, the other one is a bad debt. Fashion purchases, unnecessary gadgets. I see people say, I want to borrow money to update my iPhone. I'll just be looking. And then what is that iPhone bringing you back in return? Debt used for lifestyle consumption. I hope we're getting this thing. Let's be honest. Go to the chat and chat your bad debt, because the feedback we received was that a number of people are struggling and they're in debt. So that's why I put this slide. I created this slide just for specific. Some of them are old. Okay. Bad debt, fashion purchases, unnecessary gadgets. Then you also have deadly debt, high interest debt without a repayment strategy. You just collect money. All those loan apps, rolling short-term debt. You saw it now. Do not increase the right side of your net worth. The right side of your net worth. So I didn't even add something. Let me quickly go back. Now look at this slide. By the time you add your cash, your money market, if you have treasury bills, your retirement savings account, your car, because if you sell your car, you can get 5 million, still a good asset, because the liability if you borrowed it, but if you own the car and you're able to sell it and still get something from it, when you add everything on your left side, on your asset side, you will subtract it from your liability. I can tell you, for many average Nigerians, by the time you do, let's say you do 20 million in assets, you now subtract, you see that your liabilities are 25. You need to do this assignment. When you do it, you see that I'm telling you, please, bad debt, unnecessary gadgets, unnecessary loan apps, kill it. You have to cancel it immediately. They're not important. The next thing you want to do, this slide, forgive the last one because I couldn't really get another alternative image. But what it's really saying is, we call it the wealth waterfall. You have to ensure you cover your basic expenses, then you build your emergency fund, and then you kill any interest debt. Kill it. Anything 20%, you adjust, kill it. Except if that loan is towards a home. And I'm going to talk to you about opportunities we have in ARM for you to buy homes as a Nigerian. Whether you're in business or you are working, there's an opportunity for you to get a home at 9.47%. Okay, so cover your basic expenses. Basic is not eating out. Basic is your transportation, your fuel, maybe your data, enough. All those extras, manage them, especially if you are coming up. You must put away money in investment, okay? Same thing on the waterfall. Now, the way money works is you make it, you increase your earning power, right? Then your skills, your salary, then you scale. Then you keep the money. How you keep it is to protect it. You do a budget. You now know this is my emergency fund. Then you kill the leakages. So my problem is that if you earn 1 million naira, some people can earn 1 million naira every month and cannot even have 200,000 in at the end of the year. If you earn 1 million naira, you should be able to say you have 2.4 million because every month you kept 200K. So the next thing is to grow your money, multiply your money with time. I'll talk to you about time in a bit. Invest early, then automate it and stay consistent. If you take this picture and go and put it in your room, for me, you have done justice to yourself. Make money, increase your earning power, your skills, your salary, your scale. Then you need to keep the money. How do you keep it? Protect it. Your budget, your emergency fund, then all those leakages. Because for some people, money is just flying out. I know people that earn millions today. They don't have a home in this Abuja. When you can buy a home at the outskirts, you can buy something in Karu, in Lugbe, in Jikoyi. You can go to different places, Kubwa, and start. Then you rent it, but they're living big boy in town. So you need to think about those leakages, okay? And then the iceberg and see how you grow your money. Okay. So could this also be your strategy? Let me make you people smile a bit. I have some pictures. The context of hard work. Some people are just doing hard work for life. What's the difference? Some people are skilled. You know, maybe you are a shoemaker, you do hair, you do salon, all of that. Then we have the employed people and they have the business owners. Does this picture ring a bell? Some people will say, Dangote, he's a monopoly. He's a monopoly. You do your own in your own space, care. One day you look for grace to become monopoly. You know, just focus. Focus on your own. Focus on your space. Tell yourself in 2026, before the year ends, how I'm going to navigate. I'm going to have 10 million naira invested, even if it is in ARM, fine. If it's in another registered SEC structure, no problem. This is how much I will have as cash fund. This is how much my business will have. This is what my children will be doing. You need the clarity. Okay, how it works. This slide. This slide is also very important. If you are unskilled, your moderator, the founder, Mr. Kenneth, said something. He kept talking about leverage on the chat. And I also like leverage. I'm also a person of leverage. I understand leverage very well. You can leverage time, you can leverage effort. There are people today, like I said, 13 years ago, I know that my clients, they started leveraging time. All they did was to put 200, 500K, 1 million every month. Today, they're resting. They leverage time. For some of us, some people will be leveraging time and effort all their lives. Even at 65, they cannot retire. At 70, they're still running to see how they can move out. So unskilled people in this place, these people with the hole, their effort is, their leverage is no, they don't have any leverage. You understand? Your drivers, your cooks. So what I tell people is, we are also kind and we're good people. This life is balanced, Help those people to go. If you cannot help your cooks, your cleaners, your drivers, then train their children so that it will stop with them. It is not fair that somebody will come out for 30 days in a year, in a month, and he come and collect 50K, 30K, 100K, and that is all. Please build them up, build them up, build them up. The unskilled, their merchandise with time and effort. The skilled people, their leverage is a skill. They use their craft, their time, and their effort. The employed person is knowledge, time and effort. Look at this thing, time and effort. You are exchanging time and effort. Specialist people, specialized knowledge, time, and effort. Even me, I understood it about 15 years ago, that as an employer, my leverage is my knowledge. My employers will pay me for my knowledge, and I will exchange my time and effort. Because I understood it, I said, okay. So for those of you that are saying, I cannot invest because I don't have this, I don't have that, I'll just be laughing and pitying you. If you are employed, especially those of you that have salary dropping every month, everybody should. You must take 30% of your income to buy this time. Are you with me? You must take 30% of your income, any money that comes in, and buy that time back, because they have taken away the time from you. So that in 10 years, you do not have to give back that time as a merchandise. Mr. Kenneth, this is a very important point I'm making. I cannot even start telling you, go and these are the investment instruments. If you don't understand these psychological things, these soft issues, then we have a problem. Okay? So I want you to go to the chat so that I know you're with me and type your own leverage or your merchandise, either your leverage or merchandise. My own, I'm an employee. Knowledge, time, and effort, that's for me. But I'm also a business owner, so I leverage other people's money, other people's resources, other people's time. And my merchandise is products, because I have books. I sell my books. I have an editor. I have people who manage my book structure. So that is also a business owner. I'm also an investor, because I invest in a few businesses. So my leverage is business and money, and then my merchandise is money. You see that Dangote there, these two people, those guys, those ones that we say big business owner, they will always be under the last two. Their leverage is powerful. So what is your leverage today? What are you leveraging? And if you don't get this, come on. If you're not leveraging something to make more money and invest, I can't be telling you to come and invest. Mr. Kenneth, can I get reactions from the group? Or am I boring you? Should I stop? Precious, are you there? We have again. Kenneth, Mr. Kenneth, who else? I think there were a few people on the call. Let me see if I still have my friends there. Uchenna, are you there? Juliet. Who else is on the call? What is your leverage? Deborah, what is your leverage? Damaris, procrastination. You mentioned procrastination earlier. Now, what is your leverage? You must have a leverage. Nobody's chatting. Nobody's chatting. Have we gone to sleep? Money code. You people, if you invite me again. Okay, Mr. Kenneth said, I'm a business owner and I leverage my skills and other people's resources. Absolutely. iPhone, what is your leverage? My own leverage is all. Me, I'm from unemployed business owner and investor. Okay, I wanted to encourage you, but you people are not even encouraging me. So, should I go on? Should I go on? Because I've spoken about how you should make money, your leverage, I'm going to talk about income stream so that you don't see that I didn't bring a balance. Okay, I see some reactions. We are here. Oh. We dey here. Oh. Let me see what they are saying. I can't see anything. The chat is not. Okay, anybody that can see the chat, can you tell me what was typed? Because it's not showing that. Yeah, I tried to jump to the latest. There's something going on. I leverage my skills. Okay, I'm an employee. I leverage my skills. Okay, awesome. I'm leveraging skills. Please leverage time. You know, so money and investing, when you invest, you are actually buying the time not to get up and, there's something about, imagine on Saturday morning, just let's say it's raining, then that your blanket, even if it's a small house you have one small couch, you just don't want anybody to disturb you. Imagine when you are age 65, 70. Even if it is 57, you can decide to stop that. I don't want to be too active because my money is working for you. So for every time you invest, you are buying the time not to work in the future. Wake up, people. Every time you put money to an investment vehicle, you are buying the time not to do what? To go out and work in the future. I'm trying to go to the chat. There's one chat there. Okay. It's a bit slow. Okay. So it's not coming up. Okay. As an employee, I think I saw that. As an employee, I leverage my time, except if there's another one. Let me try something. As an employee, I leverage my time and skills. I think I've already said that. Nothing else again. Okay. So leverage. Every time you exchange money and put it in an investment, not in a saving. Savings will give you about 5% if they're generous, 3%. Investment can give you up to 40-something%. And I'll talk to you about that later. Okay? Let me move. But remember how it works in real life. Your time, your effort, what are you exchange? It's an exchange, oh. They'll come and pay you this. So I tell people, if you are being paid small money, 100K, look for who else can pay you more than that in that same role. That's what you should do. Don't stay in a job that's paying you small for too long. Don't do it. You're wasting your time because time is going. Everything is about time. 4 types of income streams. Active income, trading time for money. Did I not say it just now? I didn't even know it was on this slide. Freelancing, consulting, skills-based services. Time for money, that is active income. Then you have business income, small business, you have an agency, your product, my training, anything that is income from products or services. My books are a source of income to me today because I I put them online. I have an online store. People buy them. Okay, unfortunately, I don't have them here, but I have my books. I can maybe send you the image to your coordinator. So if you are interested in buying. So I have my books. Okay. Then asset income. I think you've probably done some of this in your community. Income generated from owned assets like dividends, interest, rent. So that's why you must buy, even if it is far, far, far away. Chan, 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 like my pastor would tell us, go and buy land in the villages. It is still a plus. But I mean, you know what I mean? Like if you buy in Karu today, it will still be something. Buy assets. So increase the left side of your balance sheet, okay? You can get rental income from there. Okay, I didn't move this. So asset income, income generated from owned assets, dividends, interest, and rent, okay? And then your digital income. Today, you can earn from technology, online, digital products, content creation, affiliate marketing. Mr. Kenneth, I'm sure you have covered some of this in the community. I just wanted to remind you that you don't have an excuse not to invest because there are many streams of income before you. Now, the only question is, are you creating value so that people can pay you? What is the value you are creating? Because if you're not creating value, they will not pay you. People want to read about maybe money. I have a money book they buy, right? People want to read about discovery. I have a book called Pathfinder they buy. In one of my books is storytelling. Now that story book, I'm going to make it into a stage play and a movie. So people will come and watch it because I created value. People pay for different things, for experience. Do you know that how many people are going to, in his death, Michael Jackson is creating value with his movie. People are going to go and watch Michael Jackson in his death. Are you starting to think about value? People just want to experience Michael Jackson. My son is 15, my last son. He said he's going to watch Michael Jackson. I said, come. Michael Jackson died before you were born. Where do you know Michael Jackson from? It's true now. You don't know where you know Michael Jackson from. But guess what? He wants to experience it. So those people that did that movie, they have created value in experience. Even myself, I don't plan to now tomorrow I go watch with my husband. So do you understand? I'm going to pay an exchange for value. They'll probably charge me, I don't know, 10, 15, whatever with the popcorn and everything. I'm going to pay them for the value they have given me. So let me ask you now, what is the value you are creating? You say you're a business person. What is the value? How many times are you selling your product every day? What is your value proposition? Are you sure that your product is even needed? Somebody will say they're doing snail. How many people eat snail? I don't know. I'm just saying. Be sure that your product is something that people are buying. People are buying every day. And then you have to ensure that you have repeat customers that are taking your product every single day. What value are you creating? So now I'm going now more into the investment, and I'm sure I'm going to do this very quickly. The richest people are not the smartest. They hack time. The hack is compounding. Oh, think of money as a seed. If you water it, you reinvest it, it becomes a forest. Money is a seed. Your money is a seed. I see people eating their seed. I see people dashing their seed to somebody, say, I'm doing Ashwabi. There is nothing wrong with Ashwabi. If you do not, for me, I must compound my money before I do anything. People don't know me. I take my 30% of every month. When I have finished, then I say, okay, how much is the Ashwabi? So you have to live like that. Make sure that you are sowing. Your money is a seed, and you have to sow every month. Even if you're a business person, that your 200,000 that you earn, take it and go and do 30% of it. That will be about 40K you are putting aside every month. And Nigeria is not okay. Do you know that even when you keep that money and you don't invest it, the money is still not enough? So I'm always wondering, then why don't I just invest it? In any case, every time you buy a product from people, you are paying them. That means you don't pay yourself. Every time you buy anything, you buy a purse, handbag, wig, you are dashing people money, you don't dash yourself. It's pathetic. But the summary is start early. Start early to compound. Even if you are in this webinar today and you are aged 60, please, you can still start. It's not too late, okay? Compounding is major. Now, look at this picture. Power of starting early. Okay, there's a bit of noise. There's a machine or whatever is passing. I'm doing the meeting out somewhere in the room. Okay, I think it will go down soon. So the power of starting early. Look at this thing. Somebody started at 45, 20 years of investing, only 95 million. Because at 45, maybe you're retiring at 65, they did only 95 million. So it's 20K per month from age 25. Now look at 20,000. Somebody who started at age 25 and did 40 years of investing, they have 300 million. Time is your greatest asset. Start now. Start now. So what do? Compounding. We don't fail because we lack money. We fail because we rely on willpower. Now, compounding has to be a daily habit. What is compounding? Take your phone, 100,000 every month for 1 year. How much do you get? Can somebody type it on the chat so I know you're with me? Can somebody type it on the chat so I know you're with me? Precious, what are the things we leverage? Let's do leverage. Okay, so after this, we go back to leverage. She said, what are the things you leverage? What are the things you leverage? I can tell you. Number one, time. Number one thing you leverage is your mind, your mindset. So I'm going to pause and have a discussion with Precious, and I'm happy to do this because it's supposed to help everybody. Your mindset is the biggest leverage that you have. Your mindset, because that is when you need to renew your mind. You need to be able to tell yourself, it is possible, I can do it. Then you begin to plan, you begin to have clarity. So your mindset is big. I can do all things. I can do this, I can do that. Your mindset, your goals, your dreams is a mindset. Then your time is a major one. You can leverage your time. Why? Because when you are procrastinating, you are not leveraging time. When you are sitting down watching TV, you're not leveraging time. When you're wasting time, basically, you're not managing time. And time is what you have to do the things that God has given you. Okay? Another thing you can leverage is your skills, your competencies, your gifts. Me, I'm a Christian, I say it all the time. In the Bible, the master gave 3 people talents. One of them went and hid the talent, and he said, I hid it because I was afraid. You did fear. Then because of that, you left your talent. So what are you doing with your talent? Because your talent is what I'm doing today. Yes, I'm teaching you about investing in ARM. I'm actually a teacher. It's a natural talent to teach people. Whether I'm teaching money, teaching this, teaching that. You need to know what your talent is. Then there are other things like technology is a leverage. You can leverage technology like we saw in the okay, let me go back to it. The other slide, you can go back here. We saw that you can leverage here. I talked about here, technology, digital products, affiliate marketing. You can leverage so many things to leverage. Real estate opportunities is a leverage. Time is a leverage. Other resources like getting somebody to help you, maybe a cousin or somebody at home while you go to do business, and then you can pay them more. So let's say you have somebody helping you, maybe a relative or so comes to help you. That person helped you. You went to do affiliate marketing. Instead of maybe 100,000, you made 200,000 naira more. You can now say, even that person that helped you, you give them 20K. So you have leveraged that person's time to do more. Precious, I hope you got that so we can move. Okay, so compound interest, according to this, is one of my best. I'm a lady of compound. I understand compounding. Everything is compound interest. If you compound money for 5 years, you know that in the next 7 or 8 years, you don't need to work. Many of you will get up and you just be chilling in Abuja. People don't understand it. Compound interest is so powerful that take your phone. Let's use this 500,000. Maybe it's a big figure, but I just want you to see something. Mr. Kenneth, I want us to do this exercise now, and I want someone to do it before we get into investment opportunities. I want us to do compound interest in the chart. So basically, okay, I have some good students. Juliet, Mr. iPhone, can we know your name? Okay, 1.2 million is 100K every month. Now multiply that by 10 for 10 years. I always like to use 10 years because it's a round figure, it's a complete circle. So 1.2 million by 10 years, what do you have? It's actually straightforward if somebody can type it or see it. Let's move so that we can get to this investment opportunities and we can take questions, okay? Okay. Well, the rest of the slides are not that many, to be honest. I probably should finish in a few 10 minutes or so. Okay. 1.2 million now, if you multiply it by 10 years, what do you have? So that we can move. I'm not teaching this class alone. Money class is a practical class. My people, money code community, are you there? 100,000 for 12 months. Every month is 1.2 million. If you multiply that by 10 years, what do you get? Nobody is speaking.
No, that will be 12 million. It's in the chat.
Okay, I'm not seeing it too.
It's in the chat. I think 3 people have dropped it in the chat.
Ah, okay, 12 million. Modesty. Inkem said 12 million. Absolutely. Do you know? Thank you, Precious. Thank you. Now, do you know that Precious, you are Precious as well. So we have 2 Precious participating. Thank you. So do you know that money, can somebody guess how much that money will be in 10 years? Just a rough estimate. What do you think? Let's guess in the chat. Albert Einstein, compound interest is the 8th wonder of the world. He who understands it. No, not 120 million. No, not that. We're not doing what do you call that, MMM or what? No. Your money is about doubles. Your money about doubles. So about 25 to 30 million. Yeah, so almost double. Remember, it's 100,000. Oh. You did not put 100 million. You didn't put 10 million. You are doing 100K. So your money, Deborah, yes, Modesta, it actually doubles. Somebody said 120 million. It's not 120 million. It's not a Ponzi scheme. It is a correct, planned, structured investment with fundamentals that are right, that guide you. So your money will be almost 25 to 30 million. So use another figure, do another exercise, 300,000 every month for 12 months for 10 years. 300 times 12 times 10. Do that and drop the answer for me. So basically, you're compounding 300,000 every month. Albert Einstein, compound interest is the 8th wonder of the world. He who understands it earns it. He who does not will pay for it. It's one of my favorite quotes. I love it. I put it up on my status like once every month or twice. I love it. 100,000. Are we there? No, so 300,000 times 12 times 10. Straightforward now. 36. This is like almost 80 or 90 million in 10 years. Let's do one last one. 500,000 every month. Some of you can do it. You are just paying your liabilities. You are buying, you buy this, buy that. Before you know it, everything is gone. I met one guy last week. He told me that it was a public holiday on Wednesday. He said he dashed somebody 300,000. And I asked him, it's okay to dash. What do you have in your money market? He said he has never even heard of the money. He didn't even know that he can be investing money. So he has been dashing people. So this year alone, from what he eventually told me, about almost maybe 9 or 10 million has passed through his hands, and he doesn't have an investment plan. Okay, 500,000 by 12 by 10. 500,000 by 12 by 10. What do you have? 500 by 12 by 10. Am I missing the chart again? 500 by 12 by 10. Nobody's chatting. Nobody's chatting me. My last question, it's a practical class. This is not theory. This is practical. The money class is practical. 500 by 12 by 10. Mr. Kenneth said 60. Let me try and do it. So 500,000 for 12 months, yes. For 12 months of the year, for 10 years is 60. This money is close to 150 when you now are taking it. So that's money. Money compounds. Thank you. Excellent yield. Thank you, Precious. Thank you, Precious. Thank you, Deborah. Thank you, Mr. Kenneth. Thank you, Juliet. Precious, how are you lost? Okay, Precious, take your phone, eh? 500,000 naira. Multiply it by 12 because you are doing 500 every month, for example. What do you get? You should have 60 million. You should have 6 million in a year. So if you have 6 million in a year multiplied by 10, that's 60 million in 10 years. Does that help? Please confirm on the chat. 6 million, absolutely. 500,000 multiplied by 12 for every month of the year, which is 12 months, multiplied by 10 for 10 years, and you now have 60 million. But I then said that because you have compounded the money, you're compounding because you're adding to it every month for the 10 years, and you're also receiving return on investment. Your return on investment will take that money between 120 to 150 million. Have you not done well just by closing your eyes to put 500K? Compounding is such a powerful tool. Can I tell you guys a secret? Many of the things I do is from compounding. And I tell people it's simple. Sacrifice compound money. After a few years, you'll be able to do all the things you want to do. Okay. Did we have any questions on compounding? So let me go through the rest of the slides without any interruptions. And then when I finish, we'll take questions because we must take questions. So what are the positioning? What are we saying for 2026? There are opportunities for equities. Equities that can return up to 45%. Equities is buying shares in a company. You buy Dangote shares, you buy Vitafoam, you buy Coca-Cola, different companies you can buy from. Fixed income and liquidity, you can buy federal government bonds. You can also do dollar investments. That's what this slide is saying. Now, what are the products that we have? So what exactly can you do? You need to tell us how much can I start investing? I cannot force you to do an amount. You can start investing from 5,000 naira, all of these products. I think just one or two of them that you need $, maybe a $500 to do. The rest of them, you can start with 5,000 naira. You can do the Discovery Fund. You can do ethical. Ethical is for like our Muslim family, Muslim brothers and sisters. So basically, it does not involve itself in any, the investments are clean investments. So we have investments for them, ethical investments. Then we also have aggressive. These ones have done so well this year. Then we have fixed income. Government minimum investment for the fixed income one is 20,000 naira. Treasury bills, you can start with 20,000. You can do Euro bonds. You can do Euro bonds, $5,000. Okay, that's the one I said is a bit high for the Euro bonds. Then corporate bonds, if you want to do a corporate bond, which are debt securities, and companies just raise debt. They open it up to raise debt, to raise capital. It's 5 million naira. Then the Sukuk minimum investment is 2 million naira. Your FGM bonds as low as 5,000 naira, you can do that. Federal government savings bonds from 5,000 naira. Then federal government bonds from 5 million. Commercial paper, 5 million naira, thereabout. But we also have the money market fund where you can do 5,000 naira, very low risk. In fact, I've been doing money market for maybe 15 years, more than. So every month I put something, no matter what is burning, I must put something. Fixed income fund, we have the Euro bond fund, we have the short-term bond fund. So all of this, I just, so that you're not, it's too much information, right? I've been registering mutual funds. I've been 7 years as managing director at the securities at ARM, registered with the Securities and Exchange Commission. Every year, I've brought out 2 or 3 mutual funds. So we sit down with my team, we conceptualize the product, and we bring it out into the market. I don't want you to be confused with all this. I tell people, if you want to start, go to money market. Just start money market. When your money begins to grow and you see it, you can then say, okay, let me go and do aggressive fund, which is mainly equities or ethical. But if you're a Muslim and you want, we can just put you straight in ethical. And you can do these investments with 5K. Okay, so I'm just giving you all the different investment options. Again, treasury bills, money market, the short-term bond fund, ethical, Eurobond. We have at least, how many? We have a number of funds that you can take advantage of. Okay. Now, I want to say something about this slide. It is your financial goal, not your income, that determines where you are going. Start today, regardless of your income. Your risk may be, okay, I have risk because of this. We look at the age of your children. What are the risks? What are the things that are affecting you? But just have a goal. Your goal may be education. You want to buy a home. You want to retire. Then we match your objective to that goal, and then we give you the advantage of what you want. So, like I've already mentioned, this is repeating itself. Federal government bonds can be as low as 5,000 naira for young people, entry people. Anybody can buy it. You can do mutual funds again, and then we help you automate your savings and investment. Then you can also look at real estate. Make sure that you diversify through real estate as well. You also diversify through real estate. You diversify through having a pension, through having your goals being clear. Then your mutual funds that are also balanced. Okay. Then I will quickly talk about the Ministry of Finance Incorporated, the opportunity for you to buy a home in Nigeria. The fund is, the ARM is the fund manager managing the fund. And then we have, you go to a mortgage institution, do your documentation and apply once you've located your house. Your house should ideally have a CFO or government, registered government document, which they will use. They'll do the assessment, and you can have up to 100 million. The working age they use is 60. I think some organizations consider 55 or so, but it's generally 60. So if you are 45, that means they'll give you the loan for 15 years. Does that make sense? So Ministry of Finance Incorporated came up with this idea to support Nigerians to own a home, and they're giving you up to 100 million to own the home. So it's a loan, it's a mortgage loan. And I mentioned it is a good debt. I mentioned it in the beginning that this is a very good debt to own. And this is just about the process of how you can access it. But again, for anybody that is interested in starting any of the investments, I can have, if you are based in Lagos, I will have somebody in Lagos visit you. If you are based in Abuja, somebody in Abuja will visit you and discuss with you in detail. So they will have a personal financial planning discussion with you and then help you to start your documentation to invest. Even if you are abroad, they would call you, send you the forms, you fill it and discuss with you online. Today, in today's world, everything can even be done on a platform. They'll set you up on ARM app, which is ARM1. You begin to see your investments and watch them grow. But as a way of summary, this is also just about the mortgage thing. So as a way of summary, I think the main thing I want to end with is, make your life count. A lot of people live their lives to chance. I can't do this. I can't this one. The Nigeria is a problem. Leave them alone. I'm not saying, I read the news to you to tell you that the economic difficulties are many. Okay. And we know that generally the country is in a difficult place. So focus on what you can control. What you can control today is the small business you have. Go there. Give it your best. Do your best. When you finish, look for 5,000-10,000, put in your investment. Even if you did it and you can save 60,000 naira at the end of the month, you have tried. You are better off than the year when you didn't have any savings. So just start. Okay, no matter what is going on, please get the braveness to just break through and start and invest for yourself. I hope I've helped you. And some of it, I can actually answer your questions and make it more interactive again from here. Thank you very much, Mr. Kenneth. It's my pleasure to have been with your team today.
Thank you very
I
much.
asked some questions. You no answer me.
Okay. Okay. You can ask the question. Your mic is unmute yourself and ask your question so that she can take it immediately. And if anybody has a question, you can raise up your hand, unmute yourself, and then ask your question. So she's still available. Precious, please go ahead and ask your question. Unmute yourself.
Okay,
Yes.
can you hear me?
Yes.
She said we can invest in bonds, and then I was like, okay, Is it okay to invest in initial public offers before it is being listed?
Okay.
Say that again. Say that again, Pressure.
You said we can invest in bonds, stocks, and then I said, what of initial public offers?
IPOs, yes, you can do IPOs as well. Like a lot of people are waiting for the Dangote IPO that's likely to come out soon. So a lot of people are waiting for that. You can do that as well. So Precious, have you invested before? Have you done any form of investing before?
Yes, I've invested in some stocks with just I was like trying to see how it works. So I just like used 5,000 to invest in like two or three of stocks on the Nigerian stock exchange.
How did you do it? Did you do it through an investment company or you did it on your phone or what?
I used an Afro Invest app on this thing, which they created a CSC account number for
Very
me.
good. Very good. So you've already started your journey. What I will advise you is continue buying every month. If you can even buy every week, buy. Hmm? Continue buying,
Okay.
buying. If today, use your age, I don't know, women don't want to say their ages, but if you are 40 or 30, give yourself 10 years, 20 years. Just keep buying. Keep buying those stocks. Talk to them and ask them, which one can I do? Which one can I buy? Keep buying. Keep buying your
Okay.
stocks. You're already on course. After you invest good place, you're
Okay.
already on course. So continue your investment. Another thing you could do is
Okay.
also to
So
start the money market fund. So you have equities and you have mutual funds. Do you understand?
yeah, that's
You have
what
the
I
money
was even
market fund.
asking. I was I was asking for the mutual funds. Where can I, because on Afro Invest I can't seem to find mutual funds on
Okay,
Afro
drop your
Invest.
name. So, Mr.
What I
Kenneth, I
see
need
is
their names.
treasury
What I
bills and
need is
commercial papers.
Mr. Kenneth will drop me your names and numbers, and the team will reach out to you on Monday to do the documentation for you to start a money market fund. And when they do that,
Oh,
do a direct debit every month. Do your direct debit. So, with automation today, Mr. Kenneth, you don't have any excuse that, oh, this one I didn't go to the bank, I forgot, they paid me the money, I ate it, nothing. Let's say you know that you are paid salary. Let's say your salary is on the 30th, right? Like today. Let's say your salary is on the 30th, for example. Okay. If your salary is on the 30th, okay, you can say, okay, what you do is if your salary is on the 30th, you can now say, okay, every fifth.
wait,
Are you with me? Every fifth,
yes, ma'am. Yes.
your direct debit will go out on the 5th of every month. So you set up your direct. That means you are giving yourself time. So there's no story about the salary didn't come in, that one didn't happen. Okay. Okay, I'm seeing your chart now. Bear with me. I'm just seeing it now. Okay. Okay, Juliet,
And
are
then,
you clear now? Drop your name and your number with Mr. Kenneth and he'll send it to me. For anybody that wants to have a money market investment or any of the investments that I mentioned, the team members will reach you one after the other and have a discussion with you. This
Okay,
home
thank
own
you.
is
Thank
not
you very
clear.
much.
Mr. Kenneth, there's a feedback on the chat. Juliet Ukuma
Yes.
says this home own is not clear. Please, can you explain what your question is? I don't know what your question is saying.
Is the home ownership mortgage?
The home
The mortgage
ownership,
for
okay. There is available money to give you as a loan. You can take a mortgage of 100 million, maximum 100 million from any so you're going to do it through a mortgage bank. We have even a Stanbic, Access, I think FCMB, First Bank. You walk into their office and tell them you want to do the MOFI, MRIF loan. Okay, let me go back to the slide. Tell them you want to do the MRIF loan. Okay, when you call our team, they will also guide you on this. So tell them you want to do the MRIF loan. It's called MRIEF. That is the Ministry of Finance Incorporated. They started this program. 100 million is what you get maximum. You cannot get more than 100 million, but you can get less. And then the rate is 9.4%. And if your age is, they use 60. So if your age is 40, that means you get 20%. They will now calculate for you how much you're going to be able to get, because based on your salary, based on what you contribute, two people may not be able to get the same thing. Does that make sense? So if two people are 40 now, one person is earning 500, another person is earning maybe 1 million. By the time you do the calculation, one of them, it may not be possible that both of them will get 50 million. So when you get to the bank, they'll do your documentation and guide you on how much you can get. But there's an opportunity for you to earn, for you to get a mortgage through ARM and the Ministry of Finance Incorporated, the MRIF program. And it's called Mofi Real Estate Investment Fund, MRIF. Okay?
Okay. Churchill is asking if it applies to those abroad.
Yes, everybody abroad, anybody out of the country and then you can buy a house anywhere in Nigeria. Oshogbo, Damaturu, anywhere, Bayelsa, anywhere, Kaduna, Jos, anywhere in Nigeria, as long as you have the CFO and the documentation. So yes, Churchill, it applies to those abroad. Churchill, welcome. You refused to talk throughout my 1 and maybe more than 1 hour. Now I started talking around 9:30, now 7:30. Or was that the time? It's now 1 o'clock. So you refused to talk, Mr. Churchill. So welcome. Thank you very much for your question. I'm happy to know that you've been in the chat with us.
Okay. Uchenna, it's like you had a question. I saw your hand up earlier. Uchenna Okoro.
Yeah. Yes, sir.
Please
good
go
afternoon,
ahead.
everyone. Good afternoon, and good afternoon. And I must say, very big thank you to Madam. Thank you very much for all the enlightenment.
You're welcome.
Okay, ma. I want to get a clarification on how to go about some of this investment that you made mention of, because I had a very bad experience, and at my early age, I'm 38 now, and I had this plan of planning my life early so as to retire and retire well. So I had an opportunity of investing then. I think it was though the person that guided me did not really guided me well. But being that it's something that is burning in me, or something that is burning in me, this urge, or with knowledge of I want to build my future so as to be financially free when at a certain age. So I gave money to one of I will call him an uncle then. I gave him money. I can remember vividly. Then this should be around 10 years ago or 11 years now. Then 500,000 naira as a then to invest for a particular bond that he brought. So he bought shares. And immediately he bought the shares. After some time, the next thing I heard that the shares crashed. So that's even I can't remember, because at the time I got very angry, and anything that has to do with shares, because I don't have the recipe knowledge about going about, so I just forgot about it. So it was a very bad experience. So my question now is, from what all you've said, I can see it's something that is worth doing, and I'm eager to do it. But I need a true guide. So I want to know, if I want to guide, is there any way I can reach out to your team, like you said, so as to get more knowledge about this thing, so as to get a proper direction, so that after making the investment, it will not be something that I will regret later.
Uchenna, what is your location?
I'm in Abuja, sir.
Okay, that makes life very easy. Like she has said, please drop your number. You're on the WhatsApp platform, right?
Yes, sir.
Are you on the WhatsApp platform?
Yes, sir. I'm on the platform WhatsApp.
Okay,
WhatsApp
so
platform, yeah.
Drop your number and a message there, and then somebody will reach out to you to guide you, answer all of these questions clearly. She said that earlier. So by Monday, somebody will reach out to you from the office to guide you in all of the other personalized and tailored to you. So at least I'm answering. Hello, I hope that my answer is correct.
Very, very correct. Very correct. Thank you so much, Mr. Kenneth. And I also want to encourage Uchenna. Don't feel bad. Sometimes you didn't know. You didn't know. So, and the other mistake many people made is that you also fell into that trap. You gave an individual your money. Notice I didn't tell you, even when you go to the organization, you are going to an organization that is registered with the Securities and Exchange Commission. I have a license as a registered fund manager to protect the assets of any Nigerian. So I tell people two things for me. Number one is my faith, but that is, insignificant because you don't know me. The biggest thing is the fact that we're licensed by Securities and Exchange Commission. So for you to invest any money today, one of the red flag is make sure that you can go and check with SEC. You can go online and see all the registered company. This company, is it registered with SEC? Or what is the regulatory body? Because the regulatory body is the one that controls what will happen and all of that. So that's the first thing. Now, the second thing is that you're not giving anybody cash. You are transferring money into a registered fund account. That account is even audited. We audit it every quarter and make returns to show SEC what we're doing. So it is not in my pocket. So I always tell people, don't carry money to give your uncle or auntie. Give this money, transfer it into an account that is regulated by the government. That is your security. So even myself, the way I'm talking to you, I be investor in my own fund. I carry my own money every month to invest. In fact, I also invest just to check what others are doing. I have one or two friends that are directors and we check ourselves. So I will put my own money too with them. Do you understand? So basically, there's regulation. That's why Nigerians get caught. You see people saying all these companies, because SEC will come to your office and do assessments. They check us every quarter. And at the end of the year, we do returns to them, annual returns. We just closed our books in March, April. They come and sit down, they check everything, they bring out our books and all. Very, very rigorous process. So it is almost, how do I explain it? For your money to get missing, because the whole structure is clean, it's clear. They protect anybody with 5,000 naira today, my investment. As the most senior person and managing director of the company, I have the responsibility to take care of the money for that person. So Mr. Kenneth has also answered you to do this on Monday. I will share with him the address and location. Walk into that office on Monday and say you want to start your investment, and I can guide him on who to ask for. You can ask for Pascal. Pascal is the head of the retail business, and he will now bring somebody to come and manage your investment. So you're in good hands. You don't have a problem. Forgive yourself for the past. What you need to do at 38, if I'm you, at 10 years. So before you are 50, you should be able to have a solid fund. You still have time. Don't worry. By the time you do this for 20 years, you'll be good now. Even if you are doing 100K, remember the analogy I did for you. Your money will still grow for you. So well done. Thank you very much.
Thank you very much, ma.
Thank you. Appreciate it.
Okay, thank you very much. Thank you, Uchenna. For those of us not on the WhatsApp group, I know some of us joined from other sources. I've dropped the link to WhatsApp on the chat. Just click and you've joined the WhatsApp group. Of course, we share all of that information there. There's a question on the chat. This is two questions, really. One says, is it advisable for someone, that's from Churchill, Chukwebuka, is it advisable for someone abroad to invest in Naira where the currency exchange continually drops? If yes, what is the benefit? Or better
I would usually say is diversification. So for example, you're coming home, you come home and you're still coming home, you're spending, there are things you do in Naira, right? So, and again, the currency for them is strong. So if they don't want to do Naira, they can also do Euro bonds, they can do foreign currency investment. Some people would say, if I do that because the Naira drops, but then the rate at which you are receiving your money. So we've seen investments more than, this year is at 17. Last year was at 20%. That's money market. For equities has done about 35, almost 40%. We have an investment, the Halal Ethical Fund. It's at 47% this year. So to me, personally, how I describe this is that your money is making you almost double the money. You buy your dollars and go back. So I personally, I do my investments in Naira. When I want to travel, I go and use my in because I've made enough money from 20%. I buy my dollars and I travel. So I keep it very simple. I say if you live abroad, you still need to have funds here and you should still be investing. So I have almost all my secondary school classmates that are abroad. They all have investments in Naira. When they come home, they don't have to worry. They just go straight to their money and then they use it to do other things. So it depends. But I also encourage that person to also do a dollar investment.
Okay, thank you. Thank you very much. I think I'll take this as we try to wrap up. Somebody's asking this question. I know it's a very wide question. That's precious. Please, can you recommend good stocks to buy on the stock exchange?
Okay, so we have ARM securities that can guide you. So when you come in, if you're not based in Abuja, so when you're sending them details, tell me those that are not based in Abuja, like in another location. If you're even based in Lagos, I will ask the equities person in Lagos to visit you or discuss with you. They will guide you on what exactly to do and how to approach the equities desk. It is a special area. I don't want to go and say tomorrow they'll say, Mrs. Kai say buy, because even me, I'm buying equities today. I call my team members and say, what's going on in the market today? What would you advise? Ultimately, they will guide you, but they also not to be seen to say, okay, they forced you to do it. Do you understand? It's a guide. So they'll give you the market research and tell you, for example, there's a lot of indication about MTN that, okay, it's good. It's at about 800 plus now. It was 500 in January, and it is going to go to about 1,000. So with that information, you can decide, okay, if I have 1 million naira, let me split it between MTN and something else. Do you understand? So that discussion they will have with you. We have an equities desk. They will discuss that with you. But equities are doing very well. If you're on this chart, go and buy equities. Can you put more light on treasury investments and other dollar investments? Yeah, so we have dollar investment, treasury. Sorry, let me go back to the chart. I'm trying to go back to it. So we have dollar investment that you can do, euro bonds. You can do, I'm answering one question now. You can do euro bond, different euro bonds that you can invest in. Churchill, are you in Abuja?
No, Churchill is based in Dubai.
It's based in Dubai. Someone can still call you and discuss with you from a minimum of 50,000 naira. You can still be investing. So basically, there are like what we call debt instruments issued in a different currency from the currency of the country, right? So it allows us to just raise capital from international investors who are offering this at a competitive yield, and then we pay you coupons on the euro bonds. So indicate again that you want someone to speak with you in detail, and I'll have the team come and do that. But the euro bond we have is about 70 to 100% tenor. Short-term USD instruments are 10 to 30%. What that means is that we are leveraging, the horizon is long-term. So you're doing this euro bond is for a long-term period, and it invests in medium, long-term instruments. And the valuation for us is hybrid valuation methodology. The returns are subject to market conditions, but it's medium to high risk. I would say it's basically okay, because we've seen a good return on the investment over time.
Okay, thank you very much. Churchill, I hope you are in the group. If you are not, the WhatsApp group link, I've dropped it in the chat, but just join the group. Any other conversations, comment, and connections, we'll do them. And okay, something that I just wanted to mention as we try to round up, something else you can leverage is network. Interestingly, we have the managing director in our network. So if she recommends us to one of her staff, be sure that, yes, they know it's Madame that sent you. So we are sure of best treatment and, of course, best return on our money. Madam, I want to say thank you very much as we try to wrap up today. I really appreciate you taking all this time and breaking it down to small details, particularly I've heard about equity, but I think this conversation about money market and all of those investments for me is something I want to really start. So please, if you are in the chat room, can you help me tell Mrs. Kai Ogar, thank you, thank you, thank you, thank you. We really appreciate it. I learned a lot. If I want to go over the things I learned, I will take maybe another 1 hour. But one thing I think I took away specifically is investment is buying back time. Maybe I always say investment as, okay, trying to earn money in the future. But
Buying
that
time.
kind of
Time,
is,
time,
yes,
time.
buying time that you don't have to work in the future.
Absolutely.
It's one of the things I wrote down. I think I wrote it and cycled it on top. Anything you invest today is not just money coming back in 1 year or 10 years. It's 6 months or 10 years in the future that you don't have to work. Because you work to earn money, right? So if your investment earns you money, you are buying back time that you don't have to work in the future. I really say thank you very much on behalf of everybody on the call. We want to say thank you. And for those of us on the call, Precious was talking about being distracted at work. Thank you for still joining and contributing. The calls are usually recorded. So after this section, I'm going to upload the recording and I'm going to share the link on the group. And I'll say that once again, if you are not on the group, the link is in the chat room. Just click and join the group or send a message. I would add you up on the group. And then for those of us interested in any kind of investing, even for those of us not interested because you don't know enough or you don't know a lot, please put your details in the comment section, have a one-on-one conversation with somebody. Now, I didn't know I could start some investment with 5,000. And the truth is, 5,000 is what we fling out every other day. You fling 5,000 every other day, every week. You just throw it somewhere. You don't even know. For anything and anything, 5,000, 10,000, it just goes somewhere. They are not monies you particularly track. Maybe you are waiting for 1 million, 100 million to invest. No, you can start from 5, 10 until it becomes a habit, and then you watch it grow, compound interest. So for those of us who are interested, those who think, oh, I don't have enough money to invest, or those who are not interested, please indicate on the group. I'm going to put it together, and then somebody is going to reach out to us. Your name, location. Just put your name and location. I will compile them. Abuja, Lagos, wherever you are, of course. Churchill in Dubai as well. So there's something for everybody. Naira, dollar, there's an investment for everybody. And trust me, this is the reason for this group. I know some of us have earned money. We'll do to earn more. But beyond earning, I want us to move on to managing and then multiplying. And this is a way to multiply your money, investment. So to everybody who has been on the call, I say thank you for spending your Saturday morning into afternoon with us. And to Mrs. Sky Ogar, it's been my pleasure. You know, this is first time we are meeting, and we are meeting virtually. But interestingly, we are in Abuja, and like Kule Shorion will say, if we are related, we'll meet again. Trust me, we'll meet again, and that will be very soon. So my appreciation to everybody who has been on the call, even for those members of the group who will watch this video thereafter. Please accept our deepest appreciation for doing us this honor. So we are going to end the call about now. If you guys have any more questions, comments, or any clarification, you can do that on the group, and then we will take it from there. So thank you all. Thank you all very much. It's my pleasure to have been your host, and it's my pleasure to do this money journey with you. The whole idea for me was, you want to learn. Why don't we learn as a community? And for being part of the community, for learning with us, it's been my pleasure. So thank you all very much. Do have a pleasant weekend, the rest of the Saturday and your Sunday. And by Monday, be sure that we'll be having somebody reach out to you. So please put all your requests in the group chat. By Monday, somebody will reach out to you.
What I say to people is,
yes, ma'am. Hello, ma'am. Oh, I thought you were saying something.
Okay, then I was going to say, I was trying to be funny. I just
Okay, ma'am.
okay, I'm back now. Can you hear me now? Can you hear me?
Yes, we can hear you. Yes, ma'am.
Okay. Okay, somebody was saying what is the leverage? What are the leverage? One other leverage is taking action. Some people, like I say, would not take action for 10 years. So one very simple action is you have the team ARM available to speak to you. Drop your numbers with Mr. Kenneth. He passes it to me right now. In the next 10 minutes, I will allocate an investment advisor to follow up with you so that you can begin your process. And then by Monday, you know, this is one action you are doing. That is a very simple one. Other than that, you've actually wasted his time and my time in not taking an action. But I've also dropped my number. If you're asking me questions that my team members will do, I will move you to them, but you can still reach me on my chat, on my other number that I usually use for the ARM work, and then I'll respond to you. Okay, somebody said she really wanted to speak to me. I'm happy to speak to you. I will chat you. If it is something that my team members can do, I'll hand you over to them. Okay, God bless you all, and it's my pleasure. I'm really happy I did this. God bless you, everyone.
Thank you very much. Thank you. Thank you for the time. Thank you for the energy. Thank you for the excitement. So for those of us who have been here, thank you all for your time. Please, let's do something about this. Barnabas, we are doing something about this. Theophilus, we are doing something about it. Of course, Juliet and everybody has been on the go. Modesta, we are doing something. Precious, of course, you know I'm on your case. Damaris, thank you. First person in the chat, thank you. Churchill, thank you very much, everyone. So please, let's do something. We cannot have listened to this. The difference between us and those who have not heard this is what we do with what we have heard. So let's move it. Let's move it. 5,000 a month, 10,000 a month, 100,000 a month, or whatever you can afford. Let's start this journey. Let's start this. Let's do it all together. Trust me, I reactivated my Bamboo account personally. I reactivated my Bamboo account and I just put in 30,000. That was me. Oh, yes. Do I want to do more? Yes. Would I have loved to do more? Yes. Will I do more? Yes. But I started anyway. I invested in GT Bank and Echo Bank. Yes. I think 2010. GT20, Echo Bank 10 or something like that. I had just activated my Bamboo. Now I'm going to go on and do AROM as well. So thank you all very much. It's been my pleasure being your host. So we'll do our chats in the group, our book of the month. Somebody's going to review the book of the month this month, definitely not me. Our book of the month and every other conversation will happen on the WhatsApp group. So let me allow us enjoy the rest of our Saturday. Thank you very much for everyone who has been with us. Precious, thank you for your time. So you were at work. Modesta, thank you. Theophilus, Churchill, Damaris, first person in. I always appreciate the first people in. Victor, thank you for joining us. Julia, thank you for your contribution. Of course, my second Julia to Chicago, thank you. That's my sister. Thank you for joining us today. And to our madam who spoke to us, my special thanks and appreciation. Bye for now. I'll upload this later in the day and I'll let you know on the group when it's uploaded. Bye-bye, everyone.